In 2018, Ken Griffin's Citadel hired a group of scientists and analysts whose weather forecasts were more accurate than those of most meteorological offices. The recruitment of the 20-strong team was unusual for a big hedge fund in a sector largely focused on stocks, bonds, and currencies, but has been a critical part of a push by Griffin's $54 billion in asset firm to build a wide-ranging commodities business encompassing both futures and physical trading. The bet on raw materials has paid off, helping Citadel make a record $16 billion in 2022 to displace Bridgewater as the most successful hedge fund on record. Or rather on record, yes, according to research by Hedge investments. When the historically subdued gas market exploded into life amid the lifting of COVID-19 lockdowns, then Russia's full-scale invasion of Ukraine, Citadel was perfectly positioned to reap billions of dollars of trading profits. Citadel are very strong in gas and power, according to Pierre Anandurand, founder of hedge fund Anandurand Capital and one of the world's top energy traders. They do a lot of work on supply and demand. They take big bets and keep them for bonds. Citadel entered the commodities business in 2002, hiring a group of former Enron traders. Its exposure is markedly higher than a decade ago, according to investor documentation seen by the Financial Times. So when commodity prices start to move, it can gain a big advantage over rivals. It reaped billions of dollars in 2021 just from betting on gas power, says people close to the firm. Last year proved even more lucrative as Russia's assault on Ukraine sent markets into panic about sanctions and energy shortages. The volatility with prices jumping first in March and again to a record high in August provided a wealth of trading opportunities. Griffin and his senior team are attracted by the size of the asset class, its low correlation with other markets, and its complexity. In gas, supply can be mapped and analyzed by his large teams of researchers, while the many gas hubs across the US and beyond offer numerous prices that can be traded. Forecasting demand is much harder. Weather heavily influences usage, which is higher during hot summers because of air conditioners and in cold winters as houses are heated. This is where Citadel is seen as having a crucial advantage, with its traders fed information by a weather team that uses supercomputers to run forecasts and includes specialists in areas such as thunderstorm and tropical cyclone prediction. Much of the team is based in London, well placed to capitalize on volatile European gas and power prices. He has been bolstered in recent years by hires from academia. Head of weather Nicholas Klingman, formerly of the UK's National Centre for Astronomical Atmospheric Science, specializes in subsea seasonal forecasts. Such predictions typically for up to 2 months ahead are far more difficult than shorter term forecasts and highly lucrative if accurate. Citadel's physical commodities business, which trades the raw materials and is led by former Morgan Stanley head of commodities trading Jane Rubinstein, traded more than 1.1 trillion cubic feet of gas in 2021 and is now a major physical gas player in the US. There are signs rivals want to get in on the act. Balisiani last year hired a tropical weather specialist and an expert in ocean warming. Last year was strong for many of Citadel's peers, Millennium Management, DE Shaw, Balisiani, and Point72 all made double-digit gains, even as many equity funds were hit by the technology stock slump. But industry insiders say Citadel did so well not only because of its diversification across assets, offering some of the best trades in years, but also thanks to the size of its bets, which with traders encouraged to run positions rather than sit on their sidelines in cash. you feel like you always have to be risk on. There's a pressure constantly from the top. According to one person with knowledge of the firm, Griffin has put the firm's recent success down to returning to office early in the pandemic. Its traders and analysts are now set to enjoy a bumper payday. Citadel last year charged $12 billion in expenses and fees to its clients. Bonuses at the firm announced to staff in late January of this year, 2023, with payments made last month, were in the multiple tens of millions of dollars for some traders. Expectations are for even bigger figures this year, 2023, with star teams set for payouts of more than $100 million. The fees are astronomical, according to one investor, but without them, firms such as Citadel cannot compete for talent. So, weather forecasts put Citadel on cloud nine. This is according to a piece written on the March 13th, 2023 edition of the Financial Times. So, see what you make of all of these, and thank you very much for watching this video.